Hi and welcome to the Market Alert for Monday the 4th of December 2023. So Nomura says that mechanical conditions for a disorderly equity sell-off are simply not in place. And I like this bit underneath yet. But it will be interesting to see how it begins to unfold. And unfortunately, I still can't get hold of the implied volatility, which is always a great precursor to what the market's going to do. So still waiting for them to get back to me on the question of how I get access to that data that I had before, which was free. And the other headline, stocks and bonds rip as rate cut pricing deepens after Powell's speech. So Powell on Friday was also again talking about cutting rates. Economic news for this week today, we've got Lagarde at 2 p.m. And then the big one for the week is going to be the non-farm payrolls. We've got ADP, which again is a precursor to the non-farm payrolls. They're out on Wednesday at 1:15. Bailey's out as well, but we'll look at these others in more detail as we go through the week. But the big one for the week, the focus, is going to be the non-farm payrolls on Friday. But saying that, now that they're talking about reducing rates, then anything that comes out positive as far as these numbers are concerned, they're going to send the market sharply to the upside. So keep that in mind as well. Okay, let's move on. Have a look at the markets, kick off with the Dow, work our way through to the metals, and then have a quick look at the basic trades from Friday. And in the Dow, another strong update. Markets continue to rip higher. Overnight, there's a bit of weakness and indecision around at the moment, which you can see there. But Friday, the market ripping higher there and continuing all the way through the trading session. The high of Friday hasn't been taken out yet, but the market showing a bit of weakness. I wouldn't be at all surprised if we go back to the daily chart. There's no sign of any red, and that just means that the market isn't even closing below the 5-bar moving average in the daily chart. So again, due for a day of profit taking in this market. And the 30 minutes showing that bit of weakness there. It may touch the high first before moving to the downside. In the German DAX, same picture, market moving higher. We have had a couple of red bars in the German DAX, but they've soon reversed, gone through the 16,045. Have a look at the monthly chart. So we're heading for 16,531. Market may change its tune when it gets to this level, but that's where it's currently heading, as can be seen with the 13-minute chart. The market ripping higher on Friday following the Dow, and there you've got the market to take out Friday's high there as well. In the S&P 500, also higher during Friday, not ripping higher by any means, but if you look at the weekly chart and the monthly chart, you will see that we're trying to get the market to the upside and back to those all-time highs, which if I just pull this across, you can see there. So the goal is to try and get through that 89% retracement and also the 4817 level there. So back to the daily chart, need to take out Friday's high. 30-minute again, you can see the market ripping higher, and now we're struggling to stay on the highs. Like I say, after so many days of the markets moving on the upside, wouldn't be surprised to see a down day, if I'm honest, as you need to have a bit of a breather. The FTSE 100 back to 7535.3, which takes us to the high to the left. We did have a look above it on Friday, but overnight we're coming back down there. We need to stay above the close if possible. If not, we'll retest the DP and the 50 EMA there. In the US dollar, this moving higher on the overnight, and also Friday tried to move higher but got slammed down a bit. It's had a bit of an impact on the metals, so let's have a look at those. And starting off with silver, we can see the market's gapped higher now. This is an unusual thing. We never used to get these in the electronic session, so there must be a good reason for it, but the market's gapped high. It's filled a gap and is now sitting on the 5 MA, but this type of signal is indicative of a market struggling to move higher, so I wouldn't be at all surprised whatsoever after the market moved up on Friday. They're going to bring this start the move back to the downside, and I'll show you more in a minute when we look at the gold silver ratio. Speaking of gold, same thing, market has gapped higher. It's filled, well, it's near enough filled the gap, so a bit more to go on this one. So is this the top for the gold and silver market at the moment? And there you can see, same thing, the market moving higher, and then currently sitting back at the R3, which you can see there. So or the R1, sorry, not the R3. The R3 is up here, sitting at the R1. trying to find some support there. But I should imagine that higher Friday has got to be tested yet for this market. Gold-silver ratio, well, as I say, it's already started to be blasted to the upside. Silver starting to lose more money in the percentage terms against gold, as can be seen there. As I've said before, I can't see this moving much higher and then starting to move lower because of that $25 area in the silver market. If we just go back and have a look at that in the weekly chart, in fact let's have a look at it in the monthly chart, you can see there you've got that sideways range that this market's been in. It's going to take an awful lot to move outside of this. I'm not saying that it can't, but the manipulators will want to try and keep this market below, well, as low as they can keep it, frankly. Simple as that. So you can see how choppy silver's been this year, how it's had the lid kept on it, and I suspect that's going to continue for the foreseeable future, as that's the goal, is to keep the silver price down. Obviously it's manipulated to assist with the net zero cobblers that we see around, and keep the silver price down for all of the electronics, and that's what its aim is to do there by selling the derivatives into the market. How the miners keep going and in mining and producing these ridiculous prices, but it should be, you know, $150 or more per ounce, given that it was it's now 50% cheaper than it was in 79 and 2011. Okay, let's have a look at the basic trades and see what happened during Friday. So during Friday the market was sideways, so we're already above Thursday's high, which you can see there, and then the market spiked to the upside and it just wanted to go up. It didn't really want to move lower, as we spoke of in Friday's alert. Market came back, retested the R1, and then prices moved higher. We had a potential signal, the signal was filled, and it was quite comfortable to know that the market was going to continue high. You can see how it came back here and sat on the 50 and the 200 MA there, and then started to move higher. I'll fast forward through this and you'll see that as the market comes back here, I decided to take the 31 point profit off the table there. And then through to the afternoon there were no signals, but the market continuing to move higher along with the Dow as it ripped higher. Unfortunately the volatility didn't kick in till around here, as very tiny bars. When it's shifted back to green there, we need a bit more volatility to give us a signal there. So the market continuing to move higher, and as you saw in the other markets, particularly the S&P and the Dow, the markets continued that up move until the close of trade. So let's have a quick look overnight at the 2-minute chart, as we've already looked at the daily chart. So the 2-minute chart consolidating at the moment, sideways, finding support at the 200 MA. That's about as much as I can tell you what it's doing. We've got the high sitting up here for Friday. If this support holds, it's likely to have a rip up to the high. Depends whether it can hold or not, as there's not much news until, I say, the main event is on Friday. Daily chart, again you can see the big move to the upside, and overnight very quiet there indeed. So that's it for this one. Like I say, there's no news today. I don't think so. Let me just double check that, just to make sure I've got it right. Yes, there is, of course. Yeah, Lagarde's out at 2 p.m, but that'll be before the afternoon session for the German DAX anyway. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.